Thanks everyone, and welcome all of you. I think a couple of years ago, when we were doing this Global Fintech Summit, and I was again moderating a panel around lending, and the first Bharat Fintech Summit, once again, that was the first time when something was talked about transaction banking. And yes, last year again, we did a very insightful panel with Ajay's team, Vivek and Ajay, Amit Pansari was there. So I think probably thanks to Digital Fifth, we're talking about this core, infrastructure in banking, which is pretty important. But again, the question still remains, right? While we have just launched the report, and of course, there's a long way to go. Probably again, most of us, which are from banking fraternity, we are aware of this particular term or the entire concept of transaction banking. But I think the overall fraternity, and again, we have some amazing personalities like Ajay leading the charge of the space of transaction banking. But very quickly, we would like to just elaborate a bit on transaction banking, very quick. And then within that, of course, the liquidity part of it, right? Because I think this liquidity term, again, has been used by most of the bankers, probably Citis or HSBCs or JP Morgans of the world, right? But what is exactly this liquidity management, So probably I would start with Ajay, and then Kashi sir, and then, of course, just a quick overview about transaction banking so that people can, try to understand that thing. And then, of course, a brief on liquidity management. Thanks, Ajay.
So quick nahi karunga. Let me, spend a little, time on explaining transaction banking. I think it deserves the, it deserves the attention which probably, as you said, it has not got. So let me give a very a snapshot of what essentially when you say transaction banking, what does it mean, right? It is effectively the managing of receivables and payables for businesses in a very, very simplistic manner. That is what transaction banking does, right? But the question of how critical is it, for the corporate, how critical is it for the bank, right? Let us try to unbundle this part. Now, when you look at a company, right, it could be a 1 lakh ka turnover ka MSME company, or it could be the big daddy of all companies, it could be Reliance Industries. At the core, or it could be an NBFC, or it could be, any other institution, right? At the core, what does the company do? It buys and it sells. It could be goods or it could be services. Effectively, this is what everyone does, right? Now, when you do that buying and selling of goods or services, there is a receivable that you have to get, and there is a payable that you might have to pay. As any business, this is the core of any company, irrespective of the turnover, what they need to do, right? The managing of receivables and payables by an institution, say like a bank, right? When they help this company to collect money and pay money, is effectively what is called transaction banking. Now, with this context, if I apply this, that how critical is transaction banking for any company, practically their business stops if they do not manage their receivables or payables effectively, right? That's the criticality of what transaction banking means for a company. Now, maybe if we switch to why is it critical for the banks, and if you actually go deeper into the balance sheet of any bank in the world, right? It could be the largest bank, global banks, or a local private bank or a cooperative bank. The bulk of their revenue actually comes from this business, which is collecting and payable, whether it is fee business or the CASA getting generated because of this activity, the NII thus getting generated. More importantly, the stickiness which it creates with the customer, right? When you as a bank are managing receivables, payables for any company, you effectively become their core strategic partner, right? So unless, you really mess up the relationship, any company, once they've chosen a bank to manage their receivables and payables, will never change that bank. That is how sticky and granular it is for banks. If you look at all global banks' balance sheets, they actually show transaction banking as a separate vertical because as an investor, they all want to know how how much of the bank's business is sticky, how much is it granular, how much are they depending on large one-offs, or how much is what will consistently remain within the bank. So the transaction banking, which is effectively the most sticky, most granular business that any bank can handle, becomes actually the most important part that any investor would see in a bank, right? So it is extremely important. Maybe yeah. So that's that's where it is from a transaction banking perspective. Maybe as we go, I'll explain the difference between the receivable, payable, liquidity. I think we can touch upon that as we.
No, perfect. I think I just had that goosebumps moment. I don't think any of us could explain in such a simple manner. We've been trying along for that particular thing. But Akashi sir, I think you built a wonderful franchise in ICICI Bank, and then of course you were managing the Standard Chartered transaction banking also, and you have seen this through various lenses also as a banker. I think. What was your first view about transaction banking as a non-transaction banker first, and then when you were at the helm of it, how do you see this transaction banking, and then of course liquidity part of it?
I think after what Ajay explained, it is very difficult to answer any other question because he's laid the basic foundation so well that everything else is superfluous. So what Ajay explained is essentially the heart of any business, whether it's a pan dukan or an aircraft manufacturing company. So to that extent, yes, there are a lot of complexity, but beneath the surface. So I'd like to, my own definition of transaction banking is another very simple mental model, which is to say that any business, again, you put an aircraft manufacturing company or put a pan dukan, is all about three kind of flows. Flow number one is the flow of goods or service, which Ajay also mentioned, like either you are buying or selling or you are stocking. That's all part of the flow, right? So the second flow is basically the flow of the information pertaining to the flow of goods, which is payable ka hai, receivable ka hai, stock in transit kitna hai, and various other things that are part of this whole. This is the information part of it. It's not the physical, but the information of what is and what is not, what's in transit, how much is money in transit, how much is goods in transit, and so on and so forth. Okay. The third part and the most critical part is the money flow. Ye dono to it's all fine, but actually it's a money flow. Now the way I saw transaction banking was that why does transaction banking exist? Okay, and what's the thing? So the thing is that these three holy trinity flows, if you see, the two flows, which is the first two, the goods flow and the information flow, are very much in the control of the company themselves, whether it's pan dukan or aircraft manufacturing company, in the form of say ERP or any system or stuff like that. They don't need anybody else. Now when the money flow comes in, unfortunately there is this fellow called bank where the money has to flow. That is not part of the company. Correct. Right? So the whole of transaction banking, the technology behind it, the whole products behind transaction banking, in complicated terms, it's called cash management, liquidity management, trade finance, supply chain, or maybe many other things that are there as part of the products, are basically how the bank integrates with the other two flows and creates a comprehensive, I would say, position for either the pan dukan or the aircraft manufacturing company to conduct their business. So this is the way, as a non-transaction banker in the beginning, I understood that this is what it is. Balance is all about semantics. Go to trade finance. I think I saw your session in the previous session. There's a huge lot of complexity that will come. There are so many codes. There are invoices. There are import-export regulations. But those are all the beneath the surface operational details. But for an understanding template, this is what it does. What it does for the corporate is that it actually manages their working capital cycle very well. Any company would like to receive money in the fastest possible way, in the lowest possible cost. And what it does for the bank is that it creates stickiness, as Ajay very neatly explained. It creates stickiness so that once you tie this whole float together, then the corporate finds it very difficult to go out and kind of bank with another banker. So this whole holy Bandhan, not the Bandhan bank, the Bandhan, the holy Bandhan that transaction banker are able to do with the corporate clients is all about, building this whole thing in such a way that the corporates, cannot go out. I mean, not in a way of prisoner not going to go out, but actually harnessing the value of the bank and build a granular business, which Ajay very clearly articulated. So,
नहीं तो ये बंधन प्यार का बंधन है अजय अमन सर I think you have seen again the entire part of the cash management services from a retail perspective, from SME perspective, from business banking perspective, and now of course the overall growth story what your bank is going through. How do you see this? And again maybe quick things, not quick by I mean to say timely quick, but a summarized way of why it is important.
Getting this question because after Kashi sir and Ajay said, I thought, what will I speak on this now, right? Because they've explained it very, very well. But as Ajay rightly mentioned, it is granular, it is sticky, right? It helps create that, kind of a money flow as Kashi sir mentioned. So it helps you create the entire ecosystem, right? Where the money will flow. There are three parties to it, right? And all of them are very important, right? If you don't have one of them, you don't have transaction banking, right? And the importance of transaction banking is also evident from the fact that today any bank worth its salt will have a transaction banking vertical or a separate focused team to do that. Well, as we mentioned, it is it is regulated, it is very, very niche, it is very, very knowledge driven, right? So it is important that the importance and criticality of this vertical is understood and which is being there. So for example, CSB Bank, I think the bank was still, when I joined bank 2.5 years back, was still in the kind of a startup bank trying to restart again. And they at that time thought they should have transaction banking vertical. When they didn't had businesses to run, they wanted transaction banking vertical to be there. So that when the businesses are there, scaled up, we also are there as a part of the journey, right? So it is not to be seen in isolation or a silo. It is part of the journey. It is to be seen as a business partner, right? So that is very important. And I think as we go and meet clients, the more cross-sell you do, the more flows you have, undertake, stickiness goes up. So the reason for customer to leave is very, very minimal. You have to really work hard to ensure the customer leaves you. Right? So that's the whole point.
So, Pyar Ka Bandhan. So, Manoj, I think you have actually built this product from IDBI, which is again a commendable thing. But I think from your lens, this liquidity and cash management is one of the most important things for government, right? And you are heading the entire vertical. Now, at least when I was a banker, today also I'm a banker by heart, jokes apart. But how do you see this liquidity and the entire treasury management kind of initiative helping government, right? Government or PSUs, right? And again, from your IDBI days, how easy or difficult it is to build these systems as a bank also or as a government also?
Yeah, so government is another important segment which probably everyone missed, but I think that is something government is.
That's because government taxes ज़्यादा लेते हैं हमारे से.
So government is basically flushed with funds, so nobody thinks that government can also think of transaction banking or liquidity management. But nowadays, if you see, it started somewhere in 2021 when Department of Expenditure, Government of India, basically they came out with SNA concept. So single nodal account concept, and which was followed by TSA concept as Treasury single account. So basically, if you see the fund flows, how this happen from government to the end beneficiary, which is a DBT beneficiary. So typically, whenever a new scheme announced in budget, so the fund flow is like from the central government, the fund will go to state, from the state it will go to district, district to block, block to village. And from there it is going to the end beneficiary. So what is happening in between is that delay which is happening and how much money is spent actually this is budgeted and how much is going there. There is no control of the government over that money. Because there are lakhs of implementing agencies on the ground which are basically implementing these schemes and they have to distribute this fund to the end beneficiaries. So now that the government has come up with the liquidity management concept, the treasury management concept. So all these things are happening just in time. So the typical cash management concept which we are talking about, the liquidity management, which we actually, it was sometime maybe in 2001 or something, started by Citibank in India for the large corporates or the conglomerates where they have presence in multiple countries. They are dealing in multiple currencies, so they have to manage their liquidity position across the day. Their treasuries are so busy, so they need something to manage liquidity. So now that concept is getting replicated in the government side also. So government is basically working on just-in-time concept. So they also have come up with systems. Some of these are developed by NIC, and some of these are provided by banks, and some fintechs are also very aggressively getting into this space. They are developing these systems for the governments where the fund flow is actually happening as and when it is required. So all the funds are basically concentrated in the parent entity account, say the state government or so. And from there is a parent-child concept, and then implementing agencies who are getting the limits through which they can disburse the funds. But the actual fund flow is happening just in time when the funds are distributed at that time only. So the cost saving which, from the liquidity management which the MNCs or the corporates introduced, that progressive government is that, they are now implementing in the scheme management. Yeah.
So now that we love our government, and Ajay, you manage both parts of the bank, right? And Yes Bank has been one of the inspiring, bank for most of the bankers, right? How difficult it is, or how easy it is for a bank to build the solutions for government, or especially on the liquidity side of it? I know we found it really painful as a banker, but what is your view, especially this visibility tools, right? The digital real-time visibility, does it exist? If it exists, how difficult it is to build these kind of tools?
So before I come to the government part, let me also, I think you
the visibility
about liquidity.
Yes.
I think all of us skipped the liquidity part, so maybe let me specifically cover that piece. So if you look at the transition of transaction banking, right? So when we started our careers, that time transaction banking had a very different connotation, right? उस time पे checks होते थे, उस time पे check truncation भी नहीं था. So checks actually used to physically travel to locations, outstation करके होता था. So real time was only a dream at that point of time. The biggest challenge was, can you collect the money for me? Right? That is actually what, between, I think, Kashi and my age, we would have been spending most of the time कि बस पहले पैसा तो लेके आ जाओ उसके लिए. Right? So that was the first challenge. Right? So it was all about managing receivables and payables. So companies को कैसे मैं उसका DSO कम करूँ और कैसे उसका DPO बढ़ाऊँ would be really where the company would thinking, right? Operational efficiencies. Then as things evolved, check truncation came into play, so the concept of outstation went off. Then digital payments, and I'm talking more from an India perspective, digital payments, came into country. So NEFT, RTGS, all of these came, NACH came. So the post-dated concept which used to be there got converted into NACH. So a lot of these developments happened. So then it was not about, the challenge was not collecting the money and paying the money, but it was how can we do it more efficiently. So efficiency creation became more important. Then the third stage was when IMPS came, UPI came, then the concept of real time came into play, and that is where APIs came into picture, right? उससे पहले it was file upload होता था, फिर host to host होता था. But then when the game changed and APIs came into play, that is when the whole paradigm of cash management changed, and the customers who at that point of time, and look at it from a customer lens, right? So CFO of a company in his day-to-day life is using Amazon, Swiggy, Ola, etc., etc. So their experience on a personal side is very digital, very real time. But then they come to office and then they log on to the bank's net banking platform, and suddenly the experience goes for a toss. So the question started getting raised from the treasurer to the CFO to the banks, saying कि boss तुम मेरे को real time क्यों नहीं दे सकते हो? Issue क्या है? Right? And that is when banks also got prompted to look at technologies like API and all of that, and virtual accounts to identify who sent the money, using API, then do it reconciliation on a real-time basis, and so on and so forth. So the whole paradigm then shifted to real-time, and that is aligned the consumer from a consumer perspective, personal and professional standpoint, right? So then it also came into how do I create financial efficiency. So it was not about collecting money quickly or delaying the payment. It was all about कि जो बीच में working capital gap बन रहा है. So how do I get the liquidity visibility, and how do I then manage that liquidity? So it is not only about getting transparency about कि अच्छा मेरा net working capital gap इतना है, but मैं वो उस gap का करूँ क्या, right? Am I able to invest it in real time, or if I have OD in other bank and I have surplus in this bank, can I transfer it from one bank to the other and optimize my NII outflow from that standpoint? So that's how transaction banking has evolved over a period of time and created different paradigms now for customers in terms of the value efficiency, right? Now coming to your point, now I would not split it between government or corporate or anyone, because today's day and age, I think one language which everyone understands now is digital, because government may be the thrust top down. Right, and the Honorable Prime Minister keeps talking about digital, and he's been. I think the government has been the biggest promoter of digital. Right, the whole India's digital innovation is only on top of the DPI which has got created. The DPI has been created by the government of India. It has been progressed by the regulator. So it is all coming top down. So इसीलिए आज जाके बेचना किसी को कि सर मैं आपको digitally ये collect कर सकता हूँ या dashboard create कर सकता हूँ, I don't think there will be any resistance from anyone towards that. Now it is a question of whether are you able to execute it properly, and which is where and this is, I think there will be a lot of fintechs here. None of the banks, and Kashi has built probably one of the best businesses. ICICI has been one of the market leaders in terms of government business. I know Kashi's personally driven that. It is, everything has not been built by the banks. I'm sure Kashi would have met with a lot of fintechs, tech fins, co-created solutions along with them, partnered along with them to go and develop solutions for the government, right? And that's how the business comes. So you go to the municipal commissioner of a certain state, you pitch to them saying, I can digitize your entire life to death journey of all your public, but this solution is not banking. I will bring in so-and-so partner, I will provide the payment rails, we will co-create and develop this solution for you. The sales pitch becomes very easy when you become the one-stop shop for the consumer. Now it could be government, it could be corporate, but what they are looking for is, can they solve all my challenges, can they create operational efficiency and financial efficiency for me in a real-time manner? And that's really where the story is.
No, fantastic. And let me tell you my experience when we were building this using bank partnerships, right? And I was, by the virtue of heading the transaction banking sales, we used to work with multiple banks, right? And they were our clients, so we had kind of a correspondent banking network, right? And in that scenario, we also saw some kind of a resistance from our senior management, right? Now, Kashi sir, during your days, of course, and you really, I saw some of the smaller fintechs, getting opportunity from your side. I think Ajay's point and my point, did you find that kind of a resistance or support from your senior management, especially on adopting this new age, smaller fintechs, which are probably 1 year or 2 years old organization? And what did you see when you were building these cash management or liquidity tools? What did you see in them?
You mean to say what did you see in the fintechs?
Yeah, I mean, what was that spark, what you saw, and then you give the opportunity to those fintechs, right?
Okay, so I'll tell you, I can now boldly say that I've now come outside of the bank. So pardon my banking fraternity friends, is that banks have brilliant minds, I can say that. And there is a lot of knowledge in the banking world. And there was a point in time where fintechs came in and they definitely took a huge leap in terms of creating agile, customer-friendly solutions, API first, native, data native kind of solutions, which banks was fundamentally not able to kind of come up to speed. But that was just the beginning, I must say. So why it was that? It was not because the banks did not know what to do. It was either a question of prioritization, that there are so many other battles to fight when you're working in a bank, and there are so many problems where your attention has to go. So obviously a bank has to choose between A, B, C, D or alternatives. Whereas a typical fintech would focus on one narrow set of a problem and put all the money, capital, technology to solve that problem. So I thought this was the core difference why fintechs in certain specific areas, whether consumer side or the business side, the B2B side of the business, were able to develop a lot of point solutions, But that was about 5 years back. But I have seen that the moment of reckoning came somewhere just pre-COVID, I must say, and continued through COVID. And banks also said that, hey, look, there is, of course, the exception to this is definitely my friend here, Ajay's bank, which was always ahead in the digital journey across the banking fraternity. But I think most other banks did realize that you need to quickly change your tech stack, be agile, be able to come up with the thing, not to compete with the fintechs. That really wasn't the objective. That really is not how the banks saw it. It was more to say that the real value of the bank gets delivered only if you are able to match up to the service which fintechs are able to design and provide. So I think once this was established, in my personal view, asking for investments within the bank when I used to be there was never a challenge, because people saw through this, the senior management, the boards, they saw this, that the nature of the sticky business this transaction banking is, and the potential that it's a steady workhorse, unnoticed. It will go about doing its business without making any noise every day. And profitable. Being profitable, chup-chap, business will happen, whether funds come in or funds go out. Okay, it will be a major churning engine for the bank. And once this realization came in, and I think most of the banks started looking at transaction banking as a serious, not only a business, but also therefore invest in tech to be the best in class. So now I think as our friend from Aman was explaining from CSB, even though the business is developing, even before that, the transaction banking has been put in place. So that shows you the level of importance. Somewhere down the line, I must say that, like if I ask you in the room, do you know the Vedas? The answer will be, I know what is the Vedas, but have you read, have you understood? The answer is no. Even I also don't know. Sometimes certain things become arcane, they become very secretive, they become very difficult to understand. And so transaction banking was one such area, which was, in a bank, I would say that I work in transaction banking, it was a whole lot difficult to explain what the hell do you do. But if you say that you're working in the branch, it was very easy to understand. Acha, branch manager, oh, acha, I know what you do, kind of stuff. So now the time has come where I think people have begun to understand that, hey, look, like there are retail customers the bank has, like that bank also has corporate customers. Like the aircraft manufacturing or the pan dukan or any SME, MSME are also customers. They also have banking needs and they also have payable, receivable needs. And now I think the senior management across the banking fraternity has really understood. And I must really say that some of the MNC banks, including Ajay's ex-bank, have been world leaders and thought leaders in bringing best-in-class technology and looking at global scale. In terms, the complexity becomes hugely more intricate because you have multiple time zones, multiple currencies, multiple laws, rules, regulations, etc., etc. So the MNC banks have really done their bit in terms of solving for this inefficiency and making it convenient for the customer. But now in the Indian context, I think I'm sure there will be no bank which transaction banking head goes and says, hey, look, I need investments here. It will not come by.
No, fantastic. It's very exciting, and wherever it is not, we are ensuring that we are going to that bank and saying, look, we'll build this particular department will build your CASA. Look at Ajay, and of course we have very good support from Ajay to educate those banks. But Aman, I think quickly, I think we pre-session we talked about the information security, right, and of course the cost part of it, right. While any business is going through digital transformation, one of the important factor is the information security, right? How do you look at that perspective with your extensive experience in banking? How important that particular part is, and then maybe we can quickly talk about the cross-border element. What Kashi, sir, he actually started that amazing topic of cross-border. Maybe we can hear from Ajay on that cross-border thing of it.
Yeah, so I think it's information security is obviously as you get more and more embedded into digital solutions and digital platforms, information security becomes very, very important, right? Because then you are exposed to cyber attacks and phishing attacks, and both from a bank perspective and from a customer perspective. But apart from the information security, also then there are a lot of compliance issues which comes into place, right? So that also has to be ensured that we continue to invest in ensuring that compliance is a critical part, right? I was reading somewhere, we should try and see the compliance is part of your overall product proposition or overall, business proposition that you want to do. It should not be an afterthought. When you are doing something, security, both from an information perspective and your compliance, has to be part of your overall thought process. It cannot be pehle business kar lo, product bana lo, then compliance dikhenge, right? So that is very, very important and very, very critical. And sometimes people learn the hard way, right? We've seen that with the regulator coming very heavily on a lot of people. But yeah, it is very important because, today frauds can actually derail your entire cash flow or your entire business that you are doing. It disrupts your financial planning, right? It exposes you to all kind of risk, which is operational and reputational, right? Today, entity, whether it's a bank or a corporate, if you have that reputational risk or you lose that reputation, it's very, very difficult to build on that. And it's very important that we continue to build on that and work on that, right? So that is what I want to say on that. So
Manoj will come back to you on the aspect how these particular things are getting streamlined. But before that, very quickly, because Kashi talked about the entire element of cross-border, and Ajay, we want to hear from you because I think this is one segment again which probably all the audience over here are very excited about how, and where the Indian ecosystem of the banks are in terms of the netting or liquidity pooling, because I think global banks have done phenomenally great work. So how exactly, how far we are, whether the Gift City can solve this paradigm of opening the entire liquidity or opening these cash management services and compete with one of these larger banks, especially when it comes to the global conglomerate. So do we have that kind of infrastructure? Are we building something like that?
Now, again, so similar to the transition that I spoke about on traditional cash management, even on transaction banking, similarly, the whole cross-border also has seen a big paradigm, right? Earlier, of course, there were not too many Indian companies with global operations. Today, if you look at it, there are so many Indian MNCs, right? Indian companies who have opened branches, subsidiaries overseas, they need banking requirements overseas, not only for managing their day-to-day operations, but also managing liquidity, optimizing the liquidity, and so on and so forth. Earlier, it used to be, again, the domain primarily for global banks. So, in my previous bank, for example, our pitch used to be that I will get you to open accounts in my various branches, and I will, give you, in my same net banking, I will give you dashboard, show you all the balances, blah, 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 and then you can move the money whenever you want, and so on and so forth, right? So that used to be an area where probably global banks would have an edge over a private bank. But today's day and age, I think that differentiation doesn't exist. Again, either a private bank can have corresponding relationship with other global banks, and then thereafter, the managing of liquidity or dashboard is actually the more simpler part. But more importantly, now there is a gift city, right? And that has actually changed the paradigm for Indian banks. So, you are able to now open accounts of all these branches, subsidiaries in Gift City, and actually position them as a pooling bank. So even though the account, master account may be with A bank or B bank in overseas, but other than the core operating balance which is required there, they can actually move the entire money into Gift City and transfer it back on a need-based basis. So right, so that gets changed. Second, and which is actually where the main difference has been, that today again through fintech partnerships, there are technology partners who are able to consolidate bank statements, MT940s in today's day and age. Tomorrow when ISO comes, the new format or whatever, comes for the account statement. But today you're able to actually get account statements from whichever bank that they have an account with, not necessarily part of your network, and get that into your into this fintech consolidated platform, manage your receivables, payables, from your ERP, and then give a consolidated view plus cash flow forecasting. So you spoke about pooling and all that, right? So notional pooling, is not allowed in most of the jurisdiction, but you can, with now, given that you have the visibility of कि मेरा US में पैसा extra है, Europe में मैं borrow कर रहा हूँ, and money is movable, right? It's convertible, is movable across the location. You can actually on a real-time basis give instructions to move money from US to Europe and manage your liquidity on a more optimal basis. And next day when your collections from in Europe come, then you move it back to US, or you move it to a location where your yields are the best. Right? So you have a pooling account, for example, say Gift City में pooling account है, Gift में आपको rate सबसे better मिल रहा है, so the excess surplus है, आप उसको you move it into Gift. So the whole way to manage cross-border liquidity, is really changed now, right? So it's actually now far more digitally viable to run your global cash management and also global liquidity on a real-time basis. Again, it will be mainly through a tech platform, because no bank will be comfortable probably sharing their account statements with other banks. So it necessarily has to be a bank agnostic platform, and which is where I think a lot of the tech partners can play a good role here.
Yeah, thanks. I think
Giving you food for thought.
I think TransBank gets benefit of the same thought. But Manoj, again, we spoke so much about the depth of the requirement of the market, and these are the market forces, right? Because now the Indian industries, the Reliance or any of the Adani group, these guys are expanding like anything, right? Now when you talk about such a massive expansion, be it Gift City, be it other things, of course, there are incumbents and there are larger banks. We're talking about, let's say, collectively private sector bank fighting out with the global set of bankers for the revenue share or the revenue pool. How do you think from your bank perspective, or maybe your IDBI bank perspective, how easy or how difficult it is for an incumbent to build this? Do we have that kind of a support what Kashi and Ajay is trying to talk about? Do we have to explain the use cases to the industry internally more, or it's relatively easier because this is more or the rather less traveled path for these other banks which are not really very active or super active on transaction banking?
So see, we have to look at it from the perspective like, what kind of target segment we are looking into. Okay. So there can be, there is, the range of the segment is quite vast, like Ajay sir and Kashi sir were discussing about, aircraft company, or maybe, cross-border transactions, like for a global conglomerate, okay, like bigger ones where they have multi-currency transactions, they have pooling accounts for different countries. At the same time, there are, mid-corporates, there are large corporates, there are MSMEs. So the basic, concept which you were talking about earlier also of transaction banking is to manage your inflows and outflows, and you should be able to map it with the information which is traveling across with those flows. So I remember I was about 2013 or 14 when CTS was introduced. So I was regional at that time for cash management of the northern region. Then there was a thought process in our bank that, now that CTS has come, so CMS will go. So no more checks. Okay, then that we had, I think, 5 or 6 check collection products, Swift or like, IREM, like that, And some of the banks even had those Swift processing centers, where checks used to travel to those centers. From there, the collection will happen. And for the remote collections, we'll get DD in return. Yeah. So when CTS came, so there was a thought process that now there is no need of CMS, and suddenly, the buying from the technology like budget or manpower, everything was cut down. Okay, but with that increase of digital transactions which happened after NEFT, IMPS, then UPI, the need for reconciliation actually became more. So suddenly, we saw that Kotak, Yes Bank, they have come up in a big bang and they are spending so much on technology. Yes Bank was the first, to introduce the APIs basically. So, suddenly we saw that, there were very few banks that time in CMS. IDBI was one of them. And we were very, very, very behind the market actually, much more behind. So, then we realized that, okay, fine, we can restart. So about 2019 we started when I was heading the product for IDBI. And then we defined our segment, like, we also, being a legacy bank having a corporate relationship, so we restarted, with some of the mid-corporates. Then we also targeted the MSME segment. So if you see now, earlier when we were talking about CMS, we were talking about large corporates only. We were talking about global conglomerates. But now the number of transactions which are happening across the channels and the huge inflow of transactions that are happening, for everyone, if you don't have an analytic engine which is able to, kind of auto-reconcile the transactions and all, if you don't have dashboards, if you don't have reports, nobody will be able to reconcile those transactions. So that's where a lot of fintechs which have come in, and they are, apart from banks, they are also offering the solutions which are, out of the box kind of market ready solutions. They are kind of, giving something which is, like Ajay sir was mentioning, that it is not now difficult to sell a dashboard or a, visibility from the fund flow visibility perspective. If you are telling someone, okay, fine, I need this, somebody will immediately see it.
And I think one thing I can add as an ex-banker, we used to fight. I was with State Bank of India, and we used to fight with our own lending machinery because they used to sell insurance, like cash management services. Why? Sir, आप CMS ले लो, नहीं cash insurance ले लो. I'm like, what, sir? We are like essential part. Like somebody, when we were starting our cash management services career, we were taught by one of the very senior, he's MD of the bank now, that transaction bankings are like eyes and ears of the bank, right, or of corporate. Such a great statement, but it was so difficult to run through the entire machinery of the relationship managers. And at that point of time, I don't know about ICICI and Yes Bank, but it was very difficult for banks which are not there in the mainstream to get this relationship manager for sales. Now we have some amazing team, especially Yes Bank and ICICI. We have some amazing set of people which are pushing this product themselves as a sales team, right? And I think that was a major challenge. In fact, a lot of people still don't have idea about that particular product line because the mainstream guy of the bank doesn't take that particular thing. Now, the change in some of the banks, what they brought is the relationship team started selling APIs. And of course, the transaction banking product teams knew that in and out, right? They were supporting or they were leading. Like in case of IndusInd, in most of the conversations, we used to lead and then the business team used to then follow up, right? And that's one change probably which has happened in the last 4 to 5 years. And of course, it's actually powering a lot of fintechs, by the way. I think I've spoken to so many fintechs in the last 3 years, also fellow fintechs, right? I think half of the ideas come from their conversation with bankers, right? So that's where they want more and more bites and more meetings from all of you guys. And of course, this has been the way, and I think we would want more and more guidance, point of wisdom.
Vaibhav, sorry, since you made that point, मैं आपको Manoj made that point, right? We pioneered EPay banking in the country. Let me tell you how it got pioneered. So the use case came from an e-com company called Snapdeal. Okay. So Snapdeal came to us उस टाइम पे ई कॉम में बहुत रिफंड्स होते थे, इफ़ यू रिमेंबर राइट. रिफंड्स वे वेरी हाई. आप एज अ कस्टमर रिफंड करते थे, उसके बाद में वो रिफंड का चेक बनता था. वो चेक कस्टमर के पास पहुंचने में हफ्ता 15 दिन लगता था. दैट वॉज व्हेन ई कॉमर्स वॉज एक्चुअल चेक. यू वुड हैव गॉट राइट. अगर आपने अमेजॉन, फ्लिपकार्ट, स्नैपडील में कुछ खरीदा और वापस रिटर्न किया, उस टाइम पे आपको चेक्स मिलते थे विच यूज्ड टू कम 10-15 days later. Right now, so they came to us saying, how can I enhance the customer experience here? So we, when we collect the material from the customer, if I trigger a file to you, can you make a payment using IMPS to the customer immediately? That is how the whole corporatization of API started, and we integrated via API with them. They got they went to the customer, collected the material on their app. They would say material collected. They would approve the refund at the same time. Trigger a API to us, we would trigger a IMPS to the customer. So within seconds of the customer giving that return to the e-com company, the SMS would come to the customer saying X amount returned to you from Standard. That is how the whole concept started, and then of course rest is history. Got triggered.
No, wonderful. I think this is really insightful, and at least I didn't know the origination
use
point.
Case, मैं वही बोल रहा हूँ. आपसे यूज केस जो है ना, फिर हम ये आप एक एक कंपनी के साथ में बैठते हो, देन यूज केस डेवलप होते हैं. लाइक इवन व्हेन यू डू यूपीआई राइट, फोन पे में कलेक्शन इज सॉल्व थ्रू एनपीसीआई कलेक्शन राइट. हाउ डू यू डू द मर्चेंट सेटलमेंट? Merchant settlement तो is pure bank related है ना. It is not driven through a network. So that is where then banks APIs come into play, and you transfer these crores of merchants money overnight via API.
No, superb. I think this topic, I think all of us probably can add a lot of value, and I'm sure audience would love it. But I think we have time constraint. So once again, let me summarize very quickly. Last Bharat Fintech Summit, Vivek, who is ex-Yes Bank, then he was in HSBC, and Aman was there from Citi, and we actually talking about the cricket analogy, and I was mentioning that this is a Rahul Dravid of banking, right? Transaction banking. And Naman had mentioned that no, this is also Virat Kohli. Now, today we have heard another analogy from Kashi sir. I think it's an archaic, built architecture like Vedas, right? It's always there. It has always been there. We have to, of course, start uncovering it, all of us together. And thanks for that particular analogy. We'll keep that in mind. Thank you very much. Thanks Ajay, Kashi, Aman, and Manoj. It's been an honor, great pleasure. Thank you very much. Thanks everyone from the audience.
Thank you so much everyone for this insightful session. Requesting you all to stay back. We would love to appreciate and acknowledgement your presence here with presenting memento. Requesting Vikrant sir to kindly come up and present the memento to each one of them. Let's thank Aman sir, Ajay sir, Manoj sir, and of course we also have Mr. Kashinath Hariharan, MD and CEO, Geo Payment Solutions Limited. Let's have a huge round of applause to all our panelists here for enlightening us with so much of information, and I think it was a very, very interesting session. Thank you so much, everyone.